When I say know what you own, it's about understanding the underlying business, the assets, and the potential risks and rewards. It's about looking beyond the hype and focusing on solid fundamentals. Vici Properties is the perfect example of a company that embodies this principle. They operate in a sector that many might overlook, but their approach is grounded in tangible assets and a clear business model. This isn't a risky tech play or some speculative venture. It's an S&P 500 REIT, a real estate investment trust that offers a different kind of stability and potential. That owns the land and buildings of iconic casinos, some of the most recognizable landmarks in the entertainment world, like Caesar's Palace, a name synonymous with Las Vegas, luxury and entertainment, and MGM Grand, another giant in the casino industry. Vici doesn't run the casinos. They aren't involved in the day-to-day operations or the gaming side of things. They own the real estate, the physical buildings and land, and lease it to top operators who manage the casino businesses. Their business is simple, a straightforward landlord-tenant relationship. They collect rent from the biggest names in gaming, hospitality, and entertainment, generating a consistent revenue stream. These are irreplaceable market-leading assets, properties that would be incredibly difficult and expensive to replicate in Las Vegas and beyond, expanding their reach across different markets. Vici's model is all about predictability and stability in an industry known for its volatility. While operators face ups and downs in their gaming revenues, Vici gets paid their rent, providing a reliable income stream. Their portfolio is geographically diverse, reducing their reliance on any single market or region, stretching across the US and Canada, tapping into different economic landscapes. They focus on premium real estate, high-quality properties that attract top-tier tenants, and the enduring appeal of experiences, recognizing that people will always seek out entertainment and leisure activities. Vici has a clear moat, a distinct competitive advantage that protects their business from competitors, and a proven path to profit, demonstrating their ability to generate consistent returns over time. For investors, it's a blend of steady income through dividends and the potential for long-term growth as the company expands its portfolio. This is smart, strategic real estate investing, a way to participate in the entertainment industry without taking on the operational risks of running a casino. That pays you to own a piece of the action, sharing in the success of these iconic properties. Booyah! Now that's what I call a winning investment strategy. Let's dive into the financial heart of Vici Properties and talk numbers. Understanding the financials is key to understanding the strength and potential of this company. Vici's financials are rock solid, built on a foundation of strategic investments and smart management. In 2024, revenue hit a significant milestone, reaching $3.85 billion. This reflects the robust performance of their diverse property portfolio. That's up over 6% from last year, demonstrating consistent growth in a competitive market. Earnings also climbed impressively to $2.68 billion, showcasing the profitability of Vici's operations. This is another strong increase, highlighting the company's ability to generate substantial profits. This is steady, reliable growth, no drama, just consistent results that investors can count on. Looking ahead in Q1 2025, revenue rose again, reaching $984 million, continuing the upward trajectory. And while net income dipped slightly, the real story, and the key metric to watch, is in AFFO, or Adjusted Funds from Operations. AFFO is up 5.6% to $616 million, indicating strong underlying cash flow generation. Because AFFO is what ultimately pays the dividend, making it a crucial indicator for investors. And Vici is a dividend machine, consistently rewarding its shareholders. The current yield is a juicy 5.4%, making it an attractive option for income-seeking investors. Vici also boasts a solid track record of consistent increases to its dividend payout. To illustrate, last year, the dividend grew over 4%, further enhancing shareholder value. Looking ahead, Vici just raised its full-year AFFO guidance, signaling confidence in its future performance. This positive outlook signals more strength ahead, reinforcing the company's growth trajectory. The cash flow supporting all this is very real, and it's coming from top-tier tenants in the entertainment and hospitality sectors. All this is happening with growing revenue, demonstrating the company's ability to expand its income streams. And with rising AFFO, Vici is well positioned to continue delivering value to its shareholders. All of this is underpinned by a reliable dividend, making Vici an attractive investment for those seeking consistent returns. In conclusion, Vici is financially sound and demonstrably shareholder-friendly, making it a compelling investment. This is the kind of report card investors dream about, showcasing strong performance across key financial metrics. And that's precisely why Vici stands out as a compelling investment opportunity in the REIT sector. Vici's secret: the triple net lease. Tenants pay property taxes, insurance, and maintenance. Vici just collects rent. This model creates ultra-predictable, stable income. Their tenants are industry giants and leases often run for decades. Many leases have built-in rent escalators tied to inflation, so income grows over time. Master lease structures bundle properties, making it tough for tenants to walk away. This dramatically reduces risk and ensures long-term cash flow. Vici's approach is defensive and smart, insulating them from rising costs and market shocks. You get a steady, inflation-protected income stream. That's why Vici's stability is unmatched in the REIT world. It's as close to a sure thing as you'll find. Vici's portfolio is massive: 93 properties across the US and Canada. That's 127 million square feet of prime real estate. The core is 54 gaming properties, iconic market-leading destinations. But Vici isn't just about casinos. They've diversified into hotels, restaurants, and entertainment venues. Over 60,000 hotel rooms and 500-plus restaurants, bars, and nightclubs generate steady rent. This ecosystem creates network effects. Each part makes the whole more valuable. Geographic and asset diversity means Vici isn't tied to one market or industry. If Vegas slows, regional markets can pick up the slack. This strategic mix builds resilience and growth potential. Vici's portfolio is designed for stability, scale, and long-term success. As an investor, you own a piece of this fortress. That's real estate power. Wall Street loves Vici. Analysts are overwhelmingly bullish. Out of 19 analysts, 18 rated a buy, with 0 sells. The average price target is $35.48, about 13% upside from today. Some see it going even higher in the next few years. The long-term outlook is strong, with forecasts of steady appreciation. Add in the 5.4% dividend yield, and you've got growth plus income. Even technical analysis rates Vici as a strong buy. When fundamentals, analyst consensus, and technicals align, that's rare. The smart money is betting on Vici. Wall Street's verdict: Vici is a winner. Vici isn't standing still. It's a dynamic company constantly evolving. They're strategically growing through smart partnerships, forging alliances that strengthen their position in the market, and securing new deals that expand their reach and diversify their holdings. Recent alliances, like the one with Red Rock Resorts, demonstrate their commitment to growth. These partnerships significantly expand their footprint in key markets, and they add high-quality premium assets to their already impressive portfolio. Vici manages its balance sheet with a high degree of care and precision. They are adept at locking in favorable terms on their debt and other financial obligations, and they maintain healthy cash reserves, keeping capital ready to seize new opportunities as they arise. Financial analysts are optimistic, expecting both earnings and dividends to continue their upward trajectory. For investors seeking stability, Vici offers what we call a fortress business model. It's a diversified portfolio of high-quality real estate assets, and it's led by a management team laser-focused on delivering strong shareholder returns. Of course, risks always exist, as with any investment in the market. But Vici's underlying fundamentals are undeniably strong and resilient. You get paid a healthy and consistent dividend, all while you wait for continued growth and appreciation of the stock. For a well-considered spot in a diversified investment portfolio, Vici is a compelling and attractive choice. The investment case is clear and straightforward. It offers steady income, significant growth potential, and strong support from Wall Street analysts. Vici is a buy, especially for those with a long-term investment horizon. That's how you can strategically build wealth through investments in real estate.